Right? This is the asymmetric opportunity of our lifetime. Gold doubled, it preserved wealth, that's great, but Bitcoin can multiply it. So you can either watch history repeat and be on the losing side of the transfer, or you can front run it, right? You can protect yourself with gold, or you can grow your wealth with Bitcoin, just like the insiders are doing right now. That's the blueprint. When gold doubles, empires collapse. It just happened again. And now for the first time, we don't have to just survive it. We can actually use it to build generational wealth.
Every time gold suddenly doubles in price, it's actually a warning that an empire is in decline. From ancient Rome to Spain, France, Britain, and even the United States, that moment has always meant the same thing. The currency is being debased, trust is breaking down, and the system is running out of time. Right now, as gold doubles again against the dollar, Mark Moss believes we're seeing the same signal repeat itself. The difference this time is that for the first time in history we have an alternative. Bitcoin, he says, is the offensive weapon in this cycle. Digital, incorruptible, and designed for a world after fiat. Gold protects your wealth, but Bitcoin builds it. And together, they define the line between collapse and opportunity. Stick around until the end of this video as Mark Moss shows how understanding this pattern can help you protect and grow your wealth in the middle of this global reset.
Hey, I am Maria with DailyDoseCrypto. Have you noticed that gold, silver, and Bitcoin have hit all-time highs recently? Is this a coincidence, or are smart investors onto something? The dollar is depreciating, inflation is eating up all of our cash, and the US national debt is through the roof, hitting new highs every day. That's why people are shifting to alternative assets like gold, silver, and Bitcoin. We at DailyDoseCrypto have partnered with ITrustCapital, your one-stop platform to buy and securely store 80+ digital assets, including Bitcoin, gold, and silver to hedge your future against debasement. With over 200,000 accounts, 15 billion in transactions, and 11,000 plus positive reviews, they're helping real investors build long-term wealth with their tax advantage, IRA, and PCA, which is a premium custody account that supports the highest level of custody and security in the space. They do this all with institutional-grade custody through partners like Fidelity Digital, Fireblocks, and Coinbase Prime, keeping your assets secure while you can trade 24/7. Fees are just 1% per transactions with no monthly or annual costs. Getting started is simple. Sign up for free and fund an IRA or PCA today. You'll receive a $100 bonus and start growing your assets the smart way. Click the link below to open your account now and begin your journey toward generational wealth.
Seen the pattern through 2,000 years of history. Rome debased the denarius, gold doubled. Spain flooded itself with silver, gold doubled. France printed assignats, gold doubled. Britain devalued the sterling, gold doubled. Bretton Woods, Nixon closed the gold window, gold doubled. And now today, gold just doubled again in the US dollar. The signal couldn't be more clear. In just the last 2 years, gold priced in US dollars has gone from around $2,000 an ounce to now today over $4,000 an ounce. That's not just a nice little rally, right? This is the exact same signal that we've seen at the end of every single empire's run. Now, what most people look at, they see that chart and they think, wow, gold must be going up, right? But just like with Rome's denarius or Spain's Veon, that's not really what's happening, okay? Gold doesn't change. The dollar is changing. Gold is the constant. The dollar, the measuring stick, it's the one that's shrinking. So remember, under Bretton Woods, the dollar was pegged at $35 an ounce, right? Then after Nixon closed the gold window, gold doubled, it tripled, eventually went up to more than 20 times by 1980. Now, every doubling was a flashing red light that confidence in the system was breaking down. And again, here we are, right? Gold has doubled in the reserve currency of our time, the US dollar. So what does that tell us? Well, it tells us that confidence in the dollar system is collapsing. Foreign nations are already reducing their dollar reserves. Central banks are buying record amounts of gold. We saw that in 2022, 2023, 2024. They're the biggest years of central bank gold purchases, right? These are breaking records. And meanwhile, U.S. debt's been exploding, now past $37 trillion with a $2 trillion deficit every single year. So, of course, the math doesn't work. And the market is starting to realize this. But yet, for the most part, nobody's really talking about this. Now, when Rome collapsed, everyone knew. When France's money collapsed, there were bread riots literally in the streets. When Britain devalued, of course, it was headline news. But today, with gold doubling, the mainstream media has been pretty silent. Almost, not entirely, because even Wall Street is having to finally admit this. Just about 2 weeks ago, JP Morgan, one of the biggest banks in the world, just put out a report calling this, quote, the debasement trade. They said retail and institutions are piling into gold and Bitcoin to protect against fiat devaluation. So while most people don't see it yet, the biggest players in the financial world are already naming what's happening, right? They're calling it the debasement trade. It's the debasement of the currency. And of course, as I just showed you, history tells us that when gold doubles, that's the sign of the empire in decline. Okay, so gold's doubled. Wall Street's calling it literally the debasement trade. But why does this always have to trigger collapse? Like, what's the engine? What's the mechanism behind it? Let's walk through it real quick. First principle, governments promise more than they can collect, right? So welfare, military, infrastructure, social programs, taxes alone can't keep up with that. So when the revenue falls short, they turn to the central bank, right? That's enter the debt monetization. So now the government has to start issuing debt. The central bank starts to buy it, right? So it's basically printing money, right? That's the modern version of what Rome and Spain did by debasing their coins. Now that newly printed money starts to dilute the purchasing power of existing money. It's invisible theft. So, you hold cash in the bank, but it becomes worth less, right? That's the hidden tax of inflation. The more they print, the more they steal from savers. It's called seigniorage in technical terms. It's the profit governments make because they issue money above its cost. And here's what it does. It transfers value from the public to the issuer. And the thing with inflation is it doesn't hit everyone equally. There's something called the Cantillon effect. And this says that new money doesn't spread uniformly. Those closest to the source of printing, so the banks, the bondholders, the governments, the elite institutions, they get the money first. And then they can use that money to buy hard assets. And by the time some of that money trickles down to you, prices have already moved. You end up paying more for the same things they got at cheaper. On top of that, inflation redistributes wealth from creditors to debtors. So that means if you had lent out money like decades ago, inflation erodes the real return. Of course, on the other side, if you owe money, inflation helps you out. Now, if you lent money decades ago, inflation erodes those real returns. Of course, on the other side, if you owe money, inflation helps you because you get to repay with weaker dollars.
Right now, central banks are buying record amounts of gold, foreign nations are reducing their dollar reserves, and even JP Morgan is calling it the debasement trade, as institutions and retail investors move into gold and Bitcoin to escape fiat devaluation. Moss warns that this is the mathematical endgame of overspending and debt monetization, a slow erosion of value that silently transfers wealth from savers to the few who hold scarce, hard asset. Gold signals the breakdown, but Bitcoin, he says, is the alternative being built for what comes after.
So, the steps are: 1. Government overspends by issuing debt. Number 2, central bank prints more money. That's the debt monetization part. 3, money supply inflates and the currency weakens. Number 4, we get existing savers, they lose, but the debtors gain. 5, elites use this new money to acquire gold and land and Bitcoin. These are the hard assets they need to survive. And then finally, confidence collapses. This is when the system breaks down. All right. Now that's the engine. That's the mechanism. That's why gold doubling is more than a signal. It's part of the mechanism. And by the way, even JP Morgan sees this, right? They frame gold and Bitcoin together under this debasement trade logic, meaning institutions already know the mechanism is running. So basically, to summarize all this, the monetary system always fails when the printing press becomes the default funding tool. And gold doubling, that's the canary in the coal mine, right? That's the tipping point. Okay, so now let's look at how this mechanism translates into an absolute wealth transfer, and more importantly, how you can be positioned to be on the right side of it, right? So the question that you should be asking right now is, how do we get on the receiving end of the wealth transfer and not on the losing end? All right, well, if we look back at the historical patterns, Rome, Spain, France, etc., we can see that the insiders, the elites, the people closest to the money printers, they move their wealth into hard assets before the collapse, right? Land, commodities, gold, and they do this to protect themselves. Meanwhile, the middle class, the savers, the people holding the currency, they're the ones that get wiped out, right? Rome's citizens, Spain's farmers, France's shopkeepers, Britain's workers, they all paid the price. That's exactly what's happening right now. Gold's doubled. The insiders see it. Central banks have been buying records amount of gold, more than any time in modern history. Wall Street's starting to catch on, right? JP Morgan literally calling it the debasement trade. They said investors are piling into gold and Bitcoin to protect against currency collapse. And they even projected a Bitcoin price. They said Bitcoin could reach $165,000 simply by just matching gold on a volatility adjusted basis. I mean, think about that. The same banks that dismissed Bitcoin for over a decade, they're now openly admitting it could outperform gold. All right, so what's the playbook here? Well, there's a two-prong playbook. First, defense. Let's play defense first. Gold is the insurance, right? Gold's been money for 5,000 years. It's the bedrock. It's preserved wealth through every empire collapse throughout history. Gold doesn't really make you rich, but it keeps you from being wiped out. All right, then comes offense. That's the second part. And for that, we have Bitcoin. Now, if gold is the shield, Bitcoin's more like the sword. It's not just another asset, it's a brand new open source monetary technology. And it's being adopted globally faster than any other asset in history, right? This is the asymmetric opportunity of our lifetime. Gold doubled, it preserved wealth, that's great, but Bitcoin can multiply it. So you can either watch history repeat and be on the losing side of the transfer, or you can front run it, right? You can protect yourself with gold, or you can grow your wealth with Bitcoin, just like the insiders are doing right now. That's the blueprint. When gold doubles, empires collapse. It just happened again. And now for the first time, we don't have to just survive it. We can actually use it to build generational wealth. Which side you want to be on? And I just want to say this is not about fear, right? This is not about doom and gloom. It's just about seeing the signs and knowing what comes next so we can adjust our strategies. Because every collapse creates opportunities for those who see the blueprint.
For the first time in history, there's a way to play both defense and offense in this economy. Gold, Moss says, is the insurance. It preserves wealth through chaos. But Bitcoin is the weapon. It multiplies it. Gold shields you from collapse, but Bitcoin lets you grow through it. Across thousands of years, no generation has ever had that kind of advantage. When past empires fell, citizens could only watch as their savings evaporated and their currency became worthless. Today we can see the signs long before the collapse reaches the street. The data is public, and the tools to escape are finally accessible. Mark Moss believes this is the moment to act with proper strategy. Those who hold gold protect what they've earned, and those who hold Bitcoin position themselves for the next system being built in real time. Every empire leaves behind two kinds of people, those who waited for rescue and those who prepared for rebirth. The question now is which one you'll be when the dollar's era ends. Thank you for sticking with us until the end of the video. If you found this breakdown helpful, make sure to like the video, subscribe, and check out our other uploads for more content that helps you build smarter, live better, and stay ahead. See you next time. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.